Hey everyone, welcome to Alpha Insights. I'm Adam.
And I'm Archer. Good to have you with us.
And hey, if you have questions while you're listening, drop them at stockalpha.ai. We'll get to them.
Right, today we're unpacking a pretty wild week for Poet Technologies. The stock blew past that $14 to $15 area, ran up, then ran back into a financing and a short report. Lots to chew on.
So, the real question here is whether that so-called $15 wall would hold as option theta expired, or if the trigger would fire and dealers would have to hedge up the chain.
Exactly. And the trigger fired. The wall broke, and the move accelerated on heavy call buying and rolling of positions into later expiration.
Thursday was the big launch. Poet announced a supply and joint development deal with Lumilens, an initial $50 million purchase order with a framework that can scale to more than $500 million over 5 years.
The market reacted hard. Shares gapped above 15, ripped through 18, and tagged better than $20 during the session. An 11-year high in intraday trading.
Options math is what makes these moves self-reinforcing. Calls at the $15 strike that opened the week with deltas around 0.25 to 0.35 suddenly finished deep in the money, pushing dealers to buy stock to hedge.
Call volume exploded into the hundreds of thousands across the chain. Implied volatility repriced. It was textbook gamma ramp-up.
Then Friday flipped from launchpad to unwind. Poet reported first quarter revenue of $503,389, which is up about 194% year over year, and a pro forma cash pile after a big financing that lands near $830 million.
They also announced a registered direct offering. 19,047,620 units sold at $21 each, with a 3-year warrant exercisable at $26.15.
That financing is the critical part. Pro forma cash of roughly $830 million removes a lot of near-term liquidity questions. Not investment advice, just observation of the balance sheet. But right on schedule with that financing, a short report from Night Market Research dropped and spread on social channels. The timing was, well, curious.
Yeah, that's a good point.
The report leaned on photographs of an office that it presents as Poet's Toronto headquarters, plus clipped quotes and anonymous conference sources. The company says those photos are not their space.
The bigger issue is sourcing. If you misidentify a headquarters and lift quotes out of context, that weakens the whole report. It's an unfalsifiable structure. Anonymous sources, unverifiable conversations, and then a bot amplification campaign.
Right, and to add to that, the Lumilens deal itself isn't a free handout of stock. Lumilens got a warrant for up to about 22,921,408 shares at $8.25, but only around 2,292,140 are immediately exercisable.
The rest vests as Lumilens actually makes payments toward product purchases. So the majority of those shares unlock only if Lumilens buys product. That's performance-locked equity, not free issuance.
A lot of the short report's claims recycled PFIC concerns the company had already addressed, and other timing items tied to corporate moves. You can build a bear case around execution risk, the fact that revenue today is tiny and production ramp is slated for 2027. Those are legitimate angles.
Exactly. Analysts note the real bear case is about whether Poet can commercialize at scale in 2027. That's a discussable risk. Fabricated office photos are not analysis. One other market mechanics point. After the May 15 expiry blew through, traders rolled exposure out to May 22, May 29, and into June. That rebuilt gamma around higher strikes like $17, $20, and $25.
And the registered directs warrant at $26.15 creates a lasting magnetic level. Dealers will hedge around that strike for years if the warrants are significant to ownership structure. Catalysts ahead. NVIDIA's quarterly report later this week. Poet doesn't have a direct relationship with NVIDIA, but historically, mentions of photonic interconnect lift optical names. Then OFC Asia in late June and hyperscaler buying cycles are next.
So the market is pricing a potential 2027 ramp, and the financing gives the company runway. but execution is still the focal point. Traders are positioning around those upcoming events.
Honestly, I was a bit surprised by how coordinated the social amplification was. Same low follow accounts popping up again. It's a reminder that narrative and technicals sometimes move faster than fundamentals.
It really is theatre at times.
All right, let's summarize. Key takeaways?
1. That $15 wall acted as a launch pad once options and volume aligned, not a permanent ceiling.
2. Lumilens' deal includes an initial $50 million order and a performance-locked warrant structure that ties equity to actual payments. So it's not free stock for a headline.
3. The $400 million financing materially improves cash runway, but the real value realization depends on executing a 2027 production ramp.
4. The short report relied on questionable sourcing and amplified on bot networks. That shapes sentiment but doesn't replace validated fundamentals.
Those are our balanced views. Analysts and data suggest both upside from successful commercialization and downside from execution risk. This is informational, not investment advice.
Exactly. Thanks for listening. Got questions? We'd love to hear from you. Head over to stockalpha.ai where you can ask us anything and we'll answer live. And while you're there, check out more market content.
See you next time on Alpha Insights.